Hey, everybody. Welcome to the Tech Guys Who Invest. We are so excited to have our guest, Eng Taing, on the show. Eng, thanks so much for coming on.
Thanks for having me, Adam and Kevin.
Awesome. Well, we're going to dive right in here. You spent time at Apple, which is a huge tech company, arguably the largest tech company there is, and then you launched Twozie Capital. That's correct?
Yep.
Now,
It's not really a den. It's more of a and I launched because it was like a lot of like in between.
perfect. We'll dive into that, but we want to know what it was like working at Apple, right? As a fellow tech guy, what was that experience like for you?
uh, in many ways, it has a lot of interesting characteristics of a startup where you have lots of different roles and responsibilities. And then there's obviously the big corporate America stuff. But one of the cool things, my experience at Apple was I had three different distinct jobs. I first started as a senior manager in the iPhone team, heading product marketing, where I was forecasting iPhone sales, and I got the 6S right. I got the 7 wrong. Oops, that's why there was a bit delays. And then I worked on Apple Music for product marketing and growth marketing. And then the last role I had was as a data scientist in Siri. So it was really cool to be able to experience many parts of Apple.
Yeah,
Love it.
that's really cool. Yeah, it's super interesting to those of us who are in tech. Apple just really seems like that awesome place to work. So, talk to us a little bit about from there to your own private investment company. Like, how did that work? And we'll dive in more too. We're super interested to find out kind of how you learned about investing and all that. But for now, just kind of help us connect the dots. What was the timeline like from Apple to that?
I started to help and really be involved and lead the Apple Real Estate Investment Club. It I started to actually bring in guests and speakers and just stuff that I wanted to learn, probably like you guys doing your podcast, to speak to my fellow Apple employees who were interested in real estate investing. I realized that there are a lot of folks who couldn't connect with the audience of my fellow engineers and Apple employees. And then I started to create my own presentations based around my experience in real estate investing. And I found that I could connect very well. And that's really spurred on the creation of Twozie Capital. I started to actually formulate Twozie Capital while I was at Apple, did my first deal while I was at Apple, and left in the middle of the pandemic to fully launch Twozie Capital.
I love it. So, while that was happening, you're at Apple. That is one of those companies that people are like, wow, you got that job. You might as well keep it for life. And maybe that's an old mentality, but assuming it's a high paying job, why leave something so comfortable? And so it sounds like it was fulfilling with the three different distinct jobs that you had.
Apple is a place where people go to retire. It's one of those places like Google, especially if you're mid-career or late career, and I classify myself as probably mid-career, where you go and it's just sort of the zenith of corporate America. You're not gonna get a better paying job, and so you're kind of stuck because you get those really nice RSUs, restricted stock units, and those go up in value every year, and you get more and more, and those little golden handcuffs become bigger golden handcuffs, and it becomes harder and harder to leave, to a point where you sort of think I want to start this startup, I want to do this thing, and then realize I'm leaving so much money on the table. And so it's actually very hard to leave. And that's sort of the point of these big companies. They have so much money and they can hoard talent. And that's sort of the moat, Google, Facebook, and Apple now. And so people go to these companies to really retire. I have a lot of friends who are comfortable with that notion because it's kind of like it's very easy once you learn how it works and are part of the most profitable company. So it's actually very hard to leave that security. But for me, I was lucky enough to have invested in real estate continuously during my many, many roles across corporate America, starting in 2009, where I started to collect more passive income than active income from my W-2 job. So it was a easier transition for me. I still left money on the table. I left money on the table, and I probably haven't really followed Apple stock, but I'm sure it's done very well since I left. But you know, I think it's hard to think about that because you're never going to leave less money on the table, I think.
So, Eng, when did you discover real estate investing? Can you talk to us a little bit about how you discovered that?
I think I discovered it when I was right after college. I studied real estate investing in college, but it was sort of one of those things where you studied finance and corporate finance. For me, I went to Wharton and studied economics. I went to investment banking afterwards, and I saw that real estate was a big asset all the wealthy individuals and endowments and institutions invested in. Um, After the financial crisis, I saw that real estate became much more affordable and that there was great value to be had. So that's when I first started to invest in real estate, right after the crash. Before that, I was always a stock trader. I was always had my money in stocks and equities, and I didn't love the volatility. I didn't like the volatility of that. And so I gravitated towards, sort of predictable real estate. And for me, real estate has always been about cash flow and predictability. So I really enjoyed that, not having to follow the market, not having to figure out what the day's close was or is. So it's been, I think for me, it's been a less stressful investment decision. And it's just been snowballing ever since.
Love it. I love that. So you went from stock trading to real estate. What are the advantages of real estate you see now versus from your experience with stock investing or stock trading, if you will?
I think the biggest advantage is the tax benefits. I talked about how I had more passive income from my active income, and my passive income has almost always been tax-free, or really tax deferred until you do all the exchanges and you never have to pay those taxes. So you can get leverage, which you can do with margin calls and stock trading, but that's very volatile and very risky. But you can get cheap leverage with real estate, and that cheap leverage comes with enormous tax advantages. And so the depreciation benefits of real estate has always made it like a no-brainer. Earning double-digit income or cash and cash returns on real estate compared to even the same amount of returns on stocks, I just could never take it as cash flow. It was always appreciation. And when I sold it, I always had to pay taxes on it. So real estate became just mathematically superior.
Yep. Sounds great. I mean, sounds like some of the reasons why Kevin and I both love real estate. And one of the things that we really like about you is this amazing story you have. I mean, you really do have quite an amazing story of, where you came from and how successful you've been and how far you've made it. And I think that's just really inspiring for people to hear. Can you talk to us a little bit about your early life and kind of, like help us understand what that was like?
Yeah, and that's one of the main reasons why I like doing these podcasts, to really get a story out there that highlights that anything can be possible from many circumstances. I was born in a refugee camp in Thailand. My parents are Cambodian, and they escaped the Khmer Rouge through a horrific genocide that wiped away half my family. That's really my parents' story in terms of the misery and the suffering. And I was, I keep hearing some of the stories of how it's very reminiscent of the gulags or the ghettos in World War II, in terms of people getting kidnapped in the middle of the night and never seeing people again. And my older brother, who was 2 years older than me, was drugged during the march through the jungle so that the soldiers couldn't catch up to us or hear us. I was in my mom's room. So I wasn't really active participant then. But I had some adorable pictures of me in straw huts and chasing chickens. And I now have 2 young baby boys. And I was thinking, man, these guys are gonna be so spoiled. But I came to America when I was 3 and grew up in LA. Grew up very poor. My parents didn't have any education, didn't have any high school or elementary school education. So they were hustlers and they worked 24/7, 7 days a week. And I grew up on poverty and welfare. Um, I grew up without having much, but I never really thought about not having much. It was more like this was just my life. Um, and I was fortunate enough to be pretty good at math, and pretty good at, um, you know, reading data patterns and stuff like that. So I actually started stock trading, day trading, when I was 16, um, during a time when it wasn't very easy to day trade, where you had to go to the library, the school library, which you dial up internet, and then
Wow.
day trade in between classes. I didn't have a cell phone until I was in college, and so it was something that I always gravitated towards in terms of my North Star was always about making money, about earning so that I could lift myself and my family out of poverty because I had the capacity potentially to do so. So every decision I made ever since, when I could, was always to put myself in a better position to help my family. And so that's sort of helped me through how I think about what I do with Twozie Capital, where I try to think about how can I help people putting themselves in a better situation to help themselves and their circumstances.
Love that. I love that that was the mission, and that is what's continuing to drive you forward. It seems like an obvious question, but how did this shape you? What you had experienced younger, uh, having your parents, growing up poor, how did that shape you as far as who you are today and how you invest?
I think you always learn the value of money when you don't have much, and you always learn um, to find a good deal and want to figure out sort of the best ways to maximize the limited resources you do have. And so when I was buying my first apartment building, I bought it right after the downturn, and it was a third the price of what it was before. It was a short sale. I became very good at negotiating over time, and I bought it from a bank directly, got a really good price on it, and then I put rehab, just what they call a BRRRR method now. I didn't know about this concept until more recently. I was like, oh, I've been doing that. But it was more about like, yeah, I just didn't want to have to pay anybody, so I did it myself, and then put my money, my time to work. Ultimately, nowadays, I put my money to work more than my time, so I can scale my own investments.
Nice. And I believe I saw where you spent some time in the Peace Corps. Can you talk to us a little bit about that and what you may have learned from that experience?
I think I went to the Peace Corps right after the financial crisis. A lot of my friends went to MBA. I said, I'm just gonna go to Peace Corps. Let's try something different. I really have always loved helping and volunteering, and I have always loved experiencing different cultures. The biggest takeaway I've gotten out of it was meeting my wife, who was also volunteering abroad. And so we met and obviously got married later. But one of the big things that helped me understand was understanding people of all circumstances and relating to people, whether they're Georgians, where I was volunteering abroad. It was right after actually the Russian invasion of Georgia, where they annexed Abkhazia, and it reminded me of a little bit of what potentially Cambodia went through, where it's also a very distinctly small country in the middle of a war zone. There's a lot of live animations everywhere. And so we actually had an escape plan when I was in Republic of Georgia. But one thing that I really learned was understanding how to relate people and how to help people out and how to relate to people all walks of life.
Love it. understanding people is huge for any aspect of life, whether it's professional, personal, or even the career investing. And speaking of that, how has that helped you as an investor, whether it's negotiating with a seller or raising capital? How would you say that the skills and the experiences working with various types of people has helped you?
I think you learn to be empathetic and open-minded about everybody's circumstances and not really think you're better than anybody. And that allows you to be a constant learner. I learn every day from talking to people. I will learn from talking to investors. I will learn from talking to property managers, to brokers, to my construction crew, to any my foreman, etc. Um, and I get to relate to them. I get to know the stories, and I get to understand what the needs are. And so that helped me with negotiations. That helped me with finding ideal tenants and finding what the tenants might want. And it's not always lower prices, lower rents. It's something different. And same thing I do for my investors. It's not always the highest returns that they need or want. It's about what they want in terms of a comfort of financial freedom and security of those investments.
I like it. That's, that's great. And it's not everyone focuses on that, right? That's what kind of strikes me. People just naturally kind of assume people want like the highest return or the lowest cost or something like that. But, once you really get to know them and find out what problem you can solve for them, that's where I think you can add the most value. I'd like to circle back to the part about where you kind of launched Twozie, right? It sounds like that happened a little bit after Apple. Can you sort of talk to us about how that happened, how it came about?
Uh, so it happened during my last year of Apple.
Okay.
And there's a funny story where I would actually be working at Apple on my nice fourth floor, top story office in Apple Park, the new $5 billion Space Age campus. I was working in Surrey, and so we had a lockdown center, so no one could come in and out. And I would always have 4 monitors, 3 working on deals and investment decks, and then 1 actually coding and doing my actual work, which at that point I've optimized and I've automated a lot of my own job. I always try to like work myself out of a job. So if my boss couldn't tell, I was and most of my coding was pretty automated at that point. I think I get good reviews, so I felt like it was managing. One of the things that really was illuminating for me was when I started to be more involved in this real estate investment club and started to highlight sort of my story. People were so intrigued and they didn't know what I thought was kind of obvious, which was real estate was a great investment, had great tax advantages. And for those who were working in W2 jobs and have been very busy all their lives and have had extremely hard, sort of always been single-minded in like in achieving, and now to reach the zenith of corporate America and Apple, they haven't had the time, a thought process, or the mindset to invest passively or invest actively themselves. So I really enjoyed starting having those conversations. I was always good at real estate investing, but I didn't necessarily have all the understanding of how to put together a real estate investment company. But I don't think I was ready to start a real estate investment company until I was really comfortable with investing my own money on all the assets I do invest in nowadays. Because unless you have skin in the game yourself, unless you've been doing it yourself, using other people's money, managing other people's money is a big and heavy responsibility. You want to safeguard their money because for them, it could be on a $50,000, $100,000. And for me, I can take risks and I take calculated bets because I have that experience and I have that capital resource. For others, it might not be the case. So I want to make sure that everybody, can also be a learner and learn and grow on the same journey. So for me, when I started Twozie Capital, it was just talking to a lot of my fellow employees, a lot of my, even I remember one time my boss came to my office and said, "Eng, I heard you're doing real estate." I was like, "Uh-oh, the gig's up." And he said, "Actually, I want to learn." I said, "Okay." So then I did a real estate 101 course. And then that turned out to be a presentation that I did across Apple as well. So it was really cool where I started to be a teacher. And I would say that when you're teaching people things, you actually that's the best way to learn yourself.
Yep.
Agree.
I agree. Because if you can't explain it in terms that other people are going to understand, then I would make the argument that you don't really understand what it is you're trying to teach. If you're just throwing that jargon out, and being in the tech space, there's acronyms that people use left and right. So if you can't break it down into terms that people who aren't in the industry can understand, then you probably have to do some more learning yourself.
Mm-hmm.
So your boss didn't catch you with the automated coding. Is that what you were thinking? Like, uh-oh, he found out about my gig.
Yeah, I thought that was the case. And then I realized that several more senior execs found out and were interested in learning more about real estate investing. And then I realized that's actually something really interesting, because all these guys who had considerable amount of capital themselves, the only asset they really had was their own house and a lot of Apple stock. And while this house in the Bay Area might be worth millions, it's not something that creates value for them in terms of income or passive income. And so I started to really teach people about cap rates, NOI, cash and cash, and investing in real estate, and all the asset classes that I invested in. That's when it really clicked on me that I had something here, that I could relate to my fellow employees. I could relate to people who I knew their circumstances. I knew what they went through. I could understand. I could relate to them, and I could provide them something that, you know, from their perspective was, this guy's just like me. He's potentially a little bit ahead of the game, and I can learn from him. And I always actually really love it when people take this sort of as both an investment opportunity to grow the capital and get great returns, but also to learn a lot.
Love it. I love it. So when we talk about the way you invest with multifamily as a particular asset from our research that came up, what's your reasoning behind that? Of all the different asset classes, why focus primarily on multifamily? Was there a pattern that you saw? I mean, you talked about how that was a skill that you realized that you were good at. I'd love to hear the origin story for that selection.
So I started to invest in very small multifamily, triplex and quadplex, and I realized that it had sort of the best economic returns and the least correlation to market forces, because single family was definitely much more tied to affordability. In the Bay Area, the rent price could go down 10%, but the house price could go up 10% because Apple stock and Tesla stock went up a lot. So people can afford more. But that doesn't mean those are great investment assets. In fact, I would argue that you should just invest in Tesla stock and Apple stock, and that's more liquid, and that's highly correlated to Bay Area real estate. For me, I really enjoyed the cash flow, the high yield cash flow of multifamily, and the scalability. It's all about scalability, and you think about tech, think about scaling. And so you think about lower variable costs, lower fixed costs. And when I was doing bigger deals, bigger investments personally, as well as then with Twozie, I realized the loans were more abundant, the loans were cheaper, people were more professional, I had more options, the variable costs were going down, I could scale, my variance of outcomes was going down in terms of standard deviations, because if you have 3 units, one tenant could be bad, and that could sink you, versus having 100 units or 200 units. There's a lot less dependence on these look parameters. And so for me, scaling was the big thing. So multifamily allowed me to scale.
And when you first started investing in the bigger stuff, the larger multifamily properties, was there some fear involved that you had to kind of overcome, or did you find that that really didn't bother you?
I bought my first property. It was probably around a big non-residential size, meaning residential being 4 units and below, or 42 units. And the good thing was I had a partner then. And I've always thought about how I can scale not just my time, but my capital. And so going to every investment, I try to make sure that I have somebody who can be boots on the ground or very local, because I'm not in the markets. I don't live in the markets I invest in, because I usually live in very expensive areas, and those aren't the best markets to invest in. And that's okay. I think I create processes in place, and I've started that even my first investment, where I bought in California when I was living in DC. And I bought when I was in Peace Corps in Georgia. When I was living, obviously in Georgia, and buying in LA. So for me, it's always been about these relationships, about building these relationships and partnering with people who have expertise, and we can share responsibilities.
Nice.
Love that. So you're big on relationships, it sounds like, and that's led to a lot of your success. What advice do you have for people when it comes to building relationships? How can they be better at that skill?
If you have no time, and if you have no time but you have money, then try to contribute some money to get in the door and learn. If you have no money but you have time, try to provide a little hustle to provide people with money some things that they don't have time for. It's always about identifying what people might want and providing that, and being just as helpful as possible. I always try to start all my investor calls with, how can I help? I almost always never even talk about my deals directly or sell anything, because I always try to provide an opportunity. This is one of many opportunities that they can do, and I love for them to evaluate it and learn from it. For those who are trying to learn and partner with people, I think it's all about being also very abundant mindset. If you can think that this isn't the last deal, this is the first of many. This is one of a series of, dozens that you do over your life. Then you'll be more generous with shares, or what you can provide to other people, and that will help you grow.
Yeah, that's interesting. I love that advice. You start with, how can I help? That's fantastic. It makes it not about you, about how you can help them, and I think that's pretty brilliant, actually. I'm curious what the typical answers are. I mean, do they vary? Are they completely across the board, or is there some fairly typical answer you often get when you ask that?
From investors?
Right? Yeah, like
Um,
when you start one of those calls and you say, "How can I help?" What do they usually say?
I think I've gotten a range of different answers. There are people who are looking for safe, predictable returns, and I can try to tell them that I'm not going to be like, if you're trying to find the best investment offering, I don't know what tech best is. I think it's just so you have lack of humility if you think you have the best thing. I think there's so many above average and so many below average, and try to identify the below and above is really what you try aim for. I think others are trying to learn how I've done what I've been able to do and want to emulate that. And oftentimes, I don't even have to talk about our investments. I talk about what I would do, what I am doing. All of our deals where I'm probably the number one investor in them. So I think about them as an investor myself, and I can talk hopefully objectively about them. And a lot of times it's about, how can I get tax favorable returns, and learning about the tax code. So I actually love reading about the tax code. And I'm doing an opportunity zone investment. And for those in tech, they have a lot of stock gains, and opportunity zones is a great way to defer those stock gains. So I probably know more about opportunity zones than most CPAs at this point.
That's great.
Love
And
that.
you started off with the investor club at Apple, and I'm sure a lot of your investors came from there. But what type of investors invest with Twozie now? Is it a lot of the same profiles there, or has it changed at all?
I've been lucky enough to get nearly 300 investors at this point in less than a year. We are growing very fast because a lot of them are referrals, and not everybody are from the initial real estate investment club. In fact, a very small fraction of them. Um, I think the profile of investors is probably someone who's a software engineer, probably in the mid 30s to late 30s, and who are thinking about real estate investing for the first time as an alternative asset to stocks. And with the current capital markets and the current monetary policies, it kind of makes sense. It kind of makes a lot of sense to get out of cash and put into hard assets, and to also diversify from the run up that has happened in the market. So a lot of folks are like that, where this potentially is the first investment. They're trying it out for the first time, or I have another set of investors who have invested actively themselves, bought a single family house or a turnkey investment in the Midwest or something like that. And they realize it's a bit more work than potentially they might want. And maybe they don't have the best experience. So I try to provide really a thoughtful understanding of what that experience should be. Because if you come from Apple, you think about customer experience, think about surprise and delight. So I try to really be investor focused as much as possible. And I have long ways to go, but my ultimate goal is to have Twozie Capital be the most investor friendly company in the world.
Wow.
Love that.
Bold goal.
Just like the Apple products that are user friendly. So I can see the parallel there.
That's awesome.
Now, Eng, we wouldn't be the tech guys who invest if we didn't ask you a tech question. And you were in the trenches of tech and the development, the data of it. What is a piece of technology that's exciting you today that you might even invest in the future, but something that generally just kind of intrigues you as an observer?
Well, I was working a lot on AI before and at Siri, but I could say that there's so many like real estate prop tech companies that are so interesting to me. But going off at a little tangent here, I think what really excites me is cryptocurrency and Bitcoin specifically. I've been a user and owner of Bitcoin since 2013. Lucky.
Wow.
And I now started a Bitcoin mining company.
Oh, wow.
Where I launched it in as part of Twozie Capital as an investment. And I really like this marrying of understanding of federal policy and how it relates to interest rates and real estate, and then cryptocurrency, Bitcoin specifically as a store asset. My background is in economics as well as data science, and so it's really interesting confluence of things, DeFi and a bunch of other new technologies using crypto as blockchain. It's really allowing people to create more transparency, and more transparency and trust is really what's needed in this space, right? If I can create smart contracts and have tokenize my investment offerings, there could be a secondary market. There could be a better trust between sponsors and investors. What I'm trying to create is just a transparency and an openness that hopefully gets people to invest and to start investing.
Yeah, that's
Love it.
fascinating. I feel like we could we could almost do an entire episode asking you all about that crypto and blockchain technology as tech that will be pretty soon be part of our financial future. It's super interesting. Eng, it's really great having you on. Now, if folks want to reach out to you, or if they want to learn more about Twozie or what you have going on, how can people get in touch with you?
Please reach out to me at Eng, E-N-G, at TozieCapital.com. Touzi capital.com, or go to my website, toziecapital.com, sign up. We almost always have 1, 2, or 3 investments opening. Right now we have 3. We're on pace to do probably 20 to 25 this year.
Wow.
So it's what I try to do is really identify, discover great alternative investments, and provide, a simplicity to it, because this shouldn't be that daunting. This shouldn't be that intimidating. It should be accessible. And what I've discovered going deeper and deeper into the space is everybody in the wealth classes does this, and they take it and they invest a heavy portion of their asset allocation into this space, commercial real estate, and real estate in general. And they take all the tax advantages. So I want to provide that and make it more accessible for everyday investors.
That's awesome. Yeah, we have a shared goal there. I mean, that's one of the big reasons why Kevin and I do this show, to try and get that exact message out. So thanks so much for coming on the show. Thanks so much for sharing everything you did. We'll put what you mentioned there in the show notes so folks can get to you. Thanks a lot, Eng. It's been great having you on.
Thanks, guys. Appreciate it.
Thanks, Eng.